Hello, today I wanted to talk about some guideline changes called TRID, which stands for TILA RESPA Integrated Disclosures. The feds have mandated these changes and they've really slowed down the loan transaction, so a mortgage consumer has to be careful about the deadlines that they write into a sales contract. When you're making an offer to a seller, there's three things that you're going to target for dates in the contract. One is the appraisal contingency release date. The second one is the financing contingency release date. And the third one is the closing date. So it used to be before the TRID changes that took place October 2015, I would try and get people to write offers using the following dates, 14, 21, and 30, meaning 14 days to release the appraisal contingency, then 7 more, 21 total to release the financing contingency, get financing approval, and release that contingency in the contract, and then 30 days to close. Well, now TRID has mandated a couple of things. One, the lender has got to get the final numbers to the consumer 3 full days prior to settlement. The closing disclosure is the form formerly called the HUD-1 settlement statement. Now it's called the closing disclosure, the CD. We have to get the CD out 3 days prior to closing. That's something that honestly used to happen the day before closing or the morning of closing. To have a closing happen in 30 days, which is blazing fast, we really needed almost all of that 30 days. Well, now, to ask us to do that 3 days prior to closing, that tacks time onto the transaction. Also, we're not allowed to order the appraisal until the consumer has been disclosed to as evidenced by receipt of their signed disclosures. So, day one is loan application. We'll probably get the loan disclosures out to the consumer day 2. They may need a day or so to review the disclosures and return them. That's day 3. Then we order the appraisal. So now we're taking to day 3 to order the appraisal, which is something I used to be able to do on day 1. We need to get the closing disclosure to the consumer 3 days prior to the settlement date. That's a bunch of extra time. We really need more time. Now, there's a conflict between realtors and lenders. The realtors still want to do things in 30 days. It's possible, but the faster that you offer a seller to go to settlement, the more pressure that you're putting on yourself in the transaction. The mortgage borrowers are tightly integrated with the process. So you've got to do the loan application quickly. You have to sign the disclosures quickly. You've got to get in all of your supporting documents quickly. You've got to respond to every single request that the lender makes quickly. I mean, same day, drop everything, get it done. And a lot of times, people just don't have that time. It's understandable. We have jobs and lives and family and commitments and travel. So just be really careful. Talk to your lender before you write any of these dates into a contract and commit yourself, because there will be quite an uproar if you miss these dates. These are contractual obligations that you must make, and a lot of consideration has to be taken into account. What's your own schedule? What's the lender's timelines like? And what can everybody together ensure that they can deliver on in the contract? Make sure you talk to all parties involved and get it right. Thanks.